let's get going. All right, so lots to talk about and lots to lots to review. So let's set the stage about what's currently going on fundamentally. If you're watching the news and the stock market, it's all over the place, right? And then you look at our markets, and they're all over the place. I mean, corn yesterday had a massive range on Monday. Corn only had like a 10-cent range, but its total voyage was 37 cents on Monday. On Tuesday, corn had a 9-cent range, but its total voyage was 43 cents on Tuesday. On Monday, Friday was 37 cents, Monday was 42 cents, and then yesterday we have this big reversal. So it's like, what's going on? Why can't the market get a grip and get moving? And I think the technicals are going to show you exactly what they're doing and exactly why here in just a second. So we look at kind of the macro headlines, and we've really got we've got two major ones and one minor one, right? We've got Russia, and everything seems to be pushed around by Russia, right? Why does that matter? Well, it's not a supply issue. Ukraine is still going to grow all of its bushels, but it's really an export issue, and the market's got to build in premium just in case Russia does invade, and we end up having to disrupt global grain flow, right? Ukraine is a massive exporter of wheat and corn, so both of those markets could be impacted. So then the other major issue that we've got going on is South America. We've got rain in the headlines. You've got if you scroll Twitter, you can see South America's burning up, and you can see South America has got no problems. All is good. So where's the facts, right? And then the minor headline is the snow that fell yesterday. Some areas got 2.5, 3 feet of snow, and a lot of that was unexpected. So is that going to save the wheat crop in Kansas and improve ratings? I don't know. We have no idea. So anytime you get all this different push, I think you got to just go up a level. It's like moving up a time frame on your charts. If the short-term charts are too inconsistent and too out of control for you to get some guidance, you got to go up a time frame and get some clarity. So let's go up a time frame on the news real quick, and let's go all the way back to 2020 when we and let's reset it here. So at the beginning of 2020, this was pre-COVID. COVID was just a figment in our imagination, and what we had was the USDA saying we had a 3 billion bushel corn carryout coming. We had totally overwhelmed the supply. Oil was inexpensive, ethanol was not profitable, and nobody wanted anything that we were making. And all these other countries are increasing their production. And so at the beginning of 2020, the U.S. was losing market share to other countries and burying ourselves in mountains of supply. Then something shifted, right? We shut ethanol down, COVID hit, but then all of a sudden, the demand just kind of came out of nowhere, right? And China stepped in and literally bought everything on planet Earth. And they bought it, and they started to fuel this rally. So here's your chart of corn. This is, and I don't have the continuation chart, so this is March of 22 here. But here's what it looked like in June of 2020, and here's what it did when China started buying in August and September, and it just started fueling a rally, right? So all through here, we started talking about the fact that, okay, now we have overwhelming demand. And in the meantime here, news people and talking heads started talking about demand destruction. Oh my gosh, these high prices, they're just going to turn off the spigot. Nobody's going to want any of our stuff. Well, the opposite happened. What actually happened through here is your ethanol margins went from negative right here to plus almost $3 per bushel by this summer. So you had this massive expanse of price and massive expanse of margin to the end user. That's unprecedented. I can't. I looked this morning for some historical relevance or replication of that, and I cannot find one where you had a massive expanse of input cost simultaneous with a massive profit margin explosion to the end user. So something happened in here that we don't understand yet. Is what I'm saying. There's something that is shifted, and we don't know what that is yet. And so in the price action of corn, we've said since the summer that we don't think we're done. And everything in here, see how overlapping and corrective this is? I mean, this is impulsive, right? I mean, we went straight up. Everything since then has been overlapping. And every time you break significantly, we end up just getting bought. And what's the significance of this 525 number where we kept buying it? I honestly think that's your cost of production. I think the market is recognizing that we've shifted from a 370 cost of production to something much higher than that because of the input costs. So the market is not going to take away the acres because we don't have the room to digest it. So we're just going to push it higher. And now that South America is now on the ropes, there's estimates, take your pick, 5, 10, 15, 20, 25 million metric tons of corn and soybeans have been lost off the South American crop. So all the way through here, the market and the trade has been expecting both demand to be destroyed and for supply to overwhelm demand. Well, supply only comes a couple of times a year, right? I mean, South America has 2 growing seasons for corn. We have 1. China has 1. Ukraine has 1. So nothing happens quickly on the supply front. Everything about supply is speculative until it's in the bin. From the demand standpoint, we haven't slowed it down. Not one little bit have we slowed down at all. China's buying more corn this year than they did last. China's crop was not good. Every other demand source, domestic and international, has a higher demand than it did a year ago. So corn has been counting on South America raising a monster crop just to keep us from exploding higher. And guess what? South America is on the ropes. Their crop is not confirmed to be small or big yet, so the market's got to put premium in. Now, as we've pushed off of these lows, we've done so in a fairly explosive manner, right? And so, and we've recovered almost all of the lows. We paused right at this high yesterday. And what do you have to do sometimes before you break through a support level or a resistance level? You've got to trade to it, you've got to pull back from it, and then you've got to attack it again. Sometimes you've got to do that in order to generate the energy. So I look for corn to break out to new highs on March. I don't think that there's any fundamentals that have shifted that suggests that we have that we are going to solve any problems in the grain market with lower prices. I think we've got to just push higher in order to resolve some of these fundamental issues that have been building for almost 2 years, right? So on the short-term structure, and I'm going to zoom in here because I want you to see what we've been doing. So this is this big move from the summer high. We've just been sideways. We've done absolutely nothing except churn time. It's been whipsaw. It's been very difficult to trade. But look at the tilt. Everything is just higher, higher, higher. Every time this market breaks, it gets bought, and it doesn't get bought on a small margin. I mean, if you look at the volume bars going back, the up bars have far more volume on the hour charts than any of the down bars. So it's like you have this buy frenzy, and then the algorithms turn off, and they just wait to see if somebody's going to sell it. So it just kind of fades back down, and then they start buying it again. And I think that's just going to keep happening until we get some sort of confirmation of what the crop is going to be, and then I think it explodes on up out of here. Now on the short-term charts, I'm going to pull this back to a 4-hour. On a short-term chart, now remember, this was the high from the second swing high that was all the way back in here, okay? This is a shorter time frame. This is all incomplete. So we're above the cloud. We have no reversal action here other than this long shadow. So I think we've got another sequence of up, down, up before this initial move is done. And I think it's going to move us up into the 650 to 680 area. And I think that'll happen pretty darn quick, depending on what the news headlines are. But I don't see anything that's going to derail us completely. Now, if the news breaks today and they say, "Hey, Russia's standing down, all good, no issues," will that push us lower? Yes, it will, just out of the headlines by itself. But does it destroy the end market or change any of the fundamental dynamics that we've talked about? No, not one bit, because everything in this is assuming that Ukraine produces big crops. It's assuming that South America raises record crops. It's assuming that we raise record crops. We have to have them, or we explode higher to levels that we really can't even fathom, because we just have no room on the supply side. All right, so let's look at soybeans. Well, surely soybeans are going to die, right? I mean, the USDA says that the carryout is going to grow to 350 million, and I read on Twitter that somebody thinks we're going to be over 600 million bushels of carryout because South America is raising their second largest crop ever. Well, they have to, because at the current moment, the crush margins are so wide all over Earth, and China's demand is so big for all these feed grains, we cannot withstand a 250, 350 million bushel decline in soybeans. And if South America has declined by 20 million metric tons, guys, 20 million metric tons is 750 million bushels of soybeans by itself. We cannot withstand that without pushing us to all-time highs here in the U.S. We do not have the room for it. So I think the volatility is going to keep increasing. I mean, look at this, right? Soybeans on this day have a 40-cent range, followed by a 20, followed by a 40-cent gigantic whipsaw. Those ranges are going to continue to get bigger, not smaller, as we resolve these issues. And they don't get resolved with lower prices. We haven't even talked about the aviation industry. There's lots of talk that we're going to move to a pure oil-based fuel for our aviation, for our jets, which is, I honestly think that demand makes 2006's ethanol corn demand look small. I think that is such a powerful driver. There's no way that you solve that issue and buy the acres globally that we have to have for soybeans to feed the pigs, to manage the crush, to fuel ethanol, to fuel aviation. There's no way you do that and break beans back down to $10. It's just not going to happen. You got to maintain them high because you got to increase the profit margin in order for that to work. So soybeans, we're bullish soybeans because of demand. We're bullish corn because of demand and supply. And if South America is short beans, look out above. Those things are going to go crazy. Wheat. Wheat has moved a lot in the last week, and everybody says it's because of Ukraine and Russia, right? Everybody says, oh, this is all just fear premium being put in. Well, it might be. That's definitely possible, or it could be that we don't have any. And we haven't grown anywhere on Earth. And so this move lower was nothing more than a corrective move down prior to a reset of higher prices. Remember, we were talking back in here that the price of wheat was too close to the price of corn in Southwest Kansas. Nobody, not one article picked up on it. Not one person mentioned it. But the reality is that we don't have the wheat to feed. We simply don't have it when we have no supply in the north. Russia and Ukraine had smaller crops than expected. China's buying as much wheat as they can from everybody in the world in order to replenish their supplies, because they had to auction all of their wheat out of reserves in order to keep their corn price down. And guess what? Their corn price went up. Even after they depleted their entire wheat reserve, their corn price surged to above $11 a bushel. It's just mind blowing how little food that they actually have, and they've done nothing to replenish it. So world governments don't have the wheat on hand. They don't have the supply. We have not grown any, and so I think this move had very little to do with Ukraine. I think it all had to do with the fact that we can't break it because we can't put it into the feed ration. We've got to take it higher and make sure that it is left for the highest protein need, which was human consumption. So I think wheat is a little bit choppy today, but I think that this strength is probably going to continue, and we should be challenged at $9 a bushel relatively soon. Now, again, if Ukraine comes out and they hug with Putin, I think we're going to get some pressure back down on this chart. Don't think we don't understand that, but I don't think we're going to break this thing lower until we solve all the other issues. One last thing, let's look at some Fibonacci retracements here on what wheat's been doing. So this is the move from last week's low up to yesterday's high, and we have retraced about 25% of it so far. Here's your 38% retracement. If you're going to be looking to re-own wheat, this is the zone to do it in right here. You've got a nice little retracement down into 38.2, anywhere above 783. That is an acute risk-reward scenario setup that is perfect for re-ownership to move this thing higher as it explodes on up. All right, that is our analysis today. I hope that provided some clarity, and if it generated more questions than clarity, which I know it can do, please don't hesitate to reach out and talk to us about it. We're happy to look through it. Remember, there is significant risk trading futures and options, and you should only do so in light of your own financial condition. We are happy to talk through any issues that you have, and we really do appreciate your participation and time this morning. We don't take that for granted. We thank you, and we will talk to you next week.